stuck. From a media company perspective, what it did is it allowed us to expand categories. If you've been in the media business, obviously there's advertisers in different categories. Now, what we found over time is that it really churned and steered up a particular category. So if we were to go to a young, dynamic startup, let's say in the real estate category, which at that point in time, and that's an example I'm giving, at that point in time really didn't advertise with us, we went and signed up with a real estate company, and by virtue of the media for equity deal, we suddenly found that all their competitors started advertising with us. So suddenly a sort of a dormant category suddenly started contributing advertising to the group. So there were two things that as far as the group was concerned.
I'm Diana Floresco and this is the Media Capital Show. This episode was recorded live at Wolf Summit in Poland. I had the amazing opportunity to share the stage with three leaders from some of the world's largest media companies: Warner Bros. Discovery, TVN, RTL, and the Times of India Group. We talked about the changes in the media industry and how these changes translate into the startup ecosystem. We covered media capital and the viability of this venture model in the context of their own organizations and new geographies, with the US and Poland presenting a lot of potential. And lastly, we touched on the role of media alliances and the prospect of seeing a European media capital fund emerge soon. I hope you enjoyed.
Hi everyone. I'm mindful we are the ones standing between you and hearing the finalist and also finding out who is the winner of this year's Great Pitch Contest. But I promise you that this is gonna definitely worth your time. This is a subject that, irrespective of your job title, your industry, or if you're a startup or a media company or a business, I think you get exposed to every day, and probably it also impacts the industry in which you're working on. And obviously we're talking about the media industry. I'm going to invite three senior media leaders to join me on stage in just a minute to mainly discuss what's really happening and what's unfolding in the media industry right now. You probably have seen loads of headlines recently, so we'll talk about that. But also, because we are a startup event, we want to discuss how specifically Warner Bros. Discovery, TVN, the Times Group, and RTL Ad Alliance are considering and working with startups in terms of driving new growth and creating new opportunities. But a huge part of our discussion is going to be about new venture models, perhaps new investment types that you haven't heard before. And before we get into that panel discussion and before I invite my guest on stage, I want to talk a bit about the venture model that we'll discuss shortly and just to give you a bit of context. And that specific investment type, it's something that we call media capital and media for equity. Not very prevalent in Poland just yet, but hopefully that will change. However, it's a model that has evolved rapidly over time. And I believe it's something that both as a founder, if you are in the market for fundraising or if you're thinking of raising investment in the next 6 to 9 months, is something that you should know of. But if you're a media company as well, trying to maybe reduce costs of acquiring new customers, or perhaps you want to optimize your inventory, that's again something that you want to talk about. Marketing is one of those things where it can really break or make your company. I think it's one of the key challenges, the top 3 reasons why most companies, when they scale and they try to go to markets, they fail. But if you do it right, obviously, the benefits can be far greater. So I was really curious to know, at a growth stage, a company at a growth stage, how much money they actually spend on advertising as a percentage of revenue. So we picked up randomly these 6 companies. These are 6 well-known brands in Europe. Obviously, there are many studies that go through hundreds of these companies' annual accounts. And you realize that 30% of their revenue is actually spent on advertising. Of course, you have companies like HelloFresh or Trivago spending up to 60% of their revenue on advertising. But where does that spend actually goes? And probably unsurprisingly, a lot of the spend actually goes into digital advertising. Digital advertising has doubled linear TV in the last few years. And if you zoom in on that digital advertising, a lot of the spend goes into social media, into search, and most recently into video advertising. Of course, traditional media companies are trying to make up essentially that threat, that loss from the likes of Facebook and Amazon. And we've seen recently the rise of streaming services. In 2022, 2021, we had 16 streaming services. 1 year later, we had 32 and counting. And Disney Plus has more followers and more subscribers than Netflix. Disney Plus launched in November 2019. Netflix has been around for 2 decades. But maybe let's talk a bit about where that actually spend goes, because 50% of the market is concentrated in the hands of a very few. And again, not a surprise that the likes of Google and Amazon and Meta own a huge chunk of that market. And that dominance is just growing and growing. And what is happening is that it's pushing a lot of publishers, unfortunately, or squeezing them out of the market. Perhaps you're very familiar with some of the headlines that we have here. BuzzFeed was one of the first companies this year to announce shutting down operations of BuzzFeed News, which then became a chain of other future announcements, including Vice and most recently MTV News, which shut down operations after 36 years. And of course, not the only reason, but one of the main reasons this happened is because, for example, BuzzFeed relied so much on Facebook in the early days, growing that content, the followers. But of course, things with Facebook have changed. And after 2016, after the US elections, Facebook received a lot more scrutiny and they deprioritized that content and the news. And of course, BuzzFeed had to suffer. So I think it's probably quite clear, and obviously we'll discuss this in a minute, that media industry is going through a lot of change. A lot of media companies are going through a formidable transformation and facing a lot of threat from these digital giants. But how is this impacting startups and impacting us? The problem is that a lot of companies, a lot of young brands are starting to advertise on digital as the first channel when you start growing your brand and trying to bring grow your followers and your image. And that's great. But you reach a point perhaps when your capital available, but also the digital channels that you had at your disposal, just simply can't match the needs of your company. So what happens is that you reach those diminishing returns. So no matter how much money you try to invest in advertising, for $1 that you spend, you realize less than $1 in revenue. So what has happened is that a lot of brands are starting to think beyond digital channels, and they probably think about TV. And in the last few years, we've seen a rise of such brands. In the UK alone, in 2020, we had over 600 new digital startups advertising on TV. But there's a tiny problem there as well. With these digital channels, it's relatively easy to test. You don't need perhaps that much capital to get started. With TV, above-the-line media, it's something that not a lot of startups know. It requires expertise and also capital available. And perhaps 2 years ago, that would not have been a problem. You would go back to the market, you would raise a bit more money, and then you can pay for your campaign. But specifically in the last couple of years, what has happened, and more recently in the last 12 months, venture capital has reached 9 years levels low. And if you are a later stage company, if you're thinking of growing your brand, especially at that late stage, the capital deployment these days has slowed down even further. So if we're looking at two sides of the market, we've got the media companies facing this threat, and then you've got digital startups, perhaps like yourself, that are thinking of how am I going to win that market? How can I create a new category for my brand? And you have these two challenges on both sides of the platform. And this is exactly why media capital and media for equity, as some of us call this investment type, has got so much awareness and so much interest recently because it addresses both sides of the market. It fills the funding gap if you're a startup. It fills the marketing gap as well if you require that expertise, but also the media utilization gap for a media company. Benefits are tremendous and extensive on both sides. And I don't want to take too much of the time speaking about this right now because we will discuss this in a second. But what I can say is that it has, for both sides of the platform, there are a lot of advantages. For a company, for a startup, you have to think that this allows you to amplify your reach, extend your runway, because essentially you are not trading cash, you're trading equity in your company. And also that expertise that comes with working with a large media company. And we'll talk about some really interesting examples in a few minutes. As a media company, you get access to a new set of customers that perhaps they would never thought of advertising on TV before. And if they are successful, if the first media for equity campaign is successful with your media company, then they will be more likely to transition and actually pay for cash for the next campaign. But media capital is one of the many other forms of corporate venturing that we'll also be discussing today. And on that note, I would like to invite on stage my panelists and my guest, Dorota from Warner Brothers Discovery TVN, Poland, Stefan Hakel from RTL Ad Alliance, and Neville from the Times Group. We have an extra chair if anyone wants to join us, but it's going to be just the four of us for now. I didn't introduce you in detail for a reason, because I think all of you have such exciting background and amazing experience. So I would like to take a few minutes to talk about that, and also when you present yourself and introduce yourself, please tell us a bit about your background in the company as well that you work for, because I think will become really relevant in the next few minutes. Neville, we can start with you.
Neville Taraporwala, easier to pronounce my family name, but people can call me Neville. I'm ex-Microsoft, ex-Yahoo. I currently am the president of the Times Group North America. The Times Group is India's largest media house, and we have an international operation based out of San Francisco. And we invest in early stage companies off the back of our balance sheet. So we are a company in India which has multiple media assets, right from print, television, radio, outdoor, the internet business. And what we do is really look for early stage companies which are looking at India as a potential market. And most of these companies are around different parts of the world looking at one of the largest economic markets in the world. And we help them scale in that market. So that's what I do. I've been doing that for almost a decade and been very successful with at least about 30 plus investments across different markets.
Thank you. Dorota?
Hello, everyone. Thank you for the invitation. It's great to be here. Look, today I'm responsible at TV Warner Bros. Discovery for revenue and all kind of the commercial partnership. But my background is really like all different commercial activities. I was responsible for many markets in terms of the new business development, new setup, as well like for transformation office for the last couple of years, including also managing Eurosport, as this is my hobby. But today really like focusing on the commercial partnerships, and I think that's why it's very interesting to be here for me.
Thank you.
Hi everybody, my name is Stefan Hakel. I'm in the new biz or biz dev department of RTL Group, part of RTL Group which is called RTL Ad Alliance. What we're doing is we are trying to help advertisers to cross border business, to start in markets they probably don't understand fully, especially when it's about media and advertising and target groups, audiences. And our main goal is to consult and to connect, on the one hand side, to keep balance on advertisers' success and on the media partners we're representing. Those are maybe 100 TV channels across Europe mainly, some 40 radio stations, loads of digital platforms and video platforms, and now recently also print and the assets of print in Bertelsmann or RTL Group.
Great. Thank you all. Maybe let's start a bit talking about your experience and what you've seen changing perhaps in the media industry. I think we can easily agree that it's going through some transformational change right now. And maybe we can start with this very broad question for a reason, then we can talk a bit about how you've worked with companies in the past, what kind of models you have adopted, and then we can go back to the media for equity because you all have very interesting perspective on that. Neville, we can start with you. You've been in the media industry for forever. What are the kind of challenges or changes that you're seeing from your perspective?
So I'll speak about my perspectives about having been in the media business for such a long time. I've actually seen it change significantly. I worked in the traditional side of the business, which was the print business. I actually moved over to the digital side of the business way back in '95 when there was not much of digital then. Went on to be the MD for Yahoo in India. So I've actually seen both sides, and I've actually seen the transformation significantly, and I'm actually seeing that coming back again, because at that point of time, the traditional media businesses were actually trying to grapple with the digitization. The landscape was changing pretty significantly. And at that point of time, media publishers had to do something. We've heard and seen a lot of media publishers in the United States really crashing their traditional businesses because digital just simply took over. I think, and I can speak about India. In India, I think as a group, we took pretty significant steps to see how we could, be part of the times, changing times, rather than being crashed due to digitization, which is where our investment model came into play, where we actually looked at the startup ecosystem, our entrepreneurial ecosystem, which ultimately will become the future advertisers. And that was one way to future-proof the media business for the media owners. So I've seen this transition. I've now seen digital becoming extremely expensive for customer acquisition. If you look at all the big giants like Facebook, Google, etc., I'm quite sure all the entrepreneurs out here who are using all these digital channels to acquire customers would find it expensive to buy. And it's sort of getting back, and people are now saying, okay, fine, it's expensive to buy here, how do I go somewhere else? So I think I've seen this huge transformation, and within which it's the media companies, the media buyers, the sellers, everybody is trying to find that sweet spot for them to operate in.
Dorota, specifically for TVN, has been quite a journey for the last few years. And also we discussed even yesterday about the rise of AI and how that is impacting how people advertise and essentially what's the future of search in the end. But what are the things that you're seeing?
Well, I would say if this is a question about the challenge, I think for some time already we see the challenge of the technology and how it's changing the world, which is not only from the traditional media perspective, but I think what is the most important from the consumer perspective. And being in the traditional media before, I'm legacy discovery, then the whole different adaptation to the market, transactions, mergers, and so on. Today, as a Warner Media, we see and we build the business in a way that, on the one hand, we're trying to provide the consumers in a traditional way, that's what is expected, because I think sitting today with the startups, I think at the end it's always important this end user, yes, and how we want to respond to the needs. So at the same time, talking about our experience, we started to develop quickly the all new platforms, new products, which, follow the technology and follow the consumption changes on the consumer side, to be able to deliver the products, or the products and the environment to answer the drive which comes from the technology innovation and from the innovation generally. So if you talk about the challenges, I would say that the constant challenge, probably with the greatest speed, is like how to use this technology shift, how to respond quicker, better, how to be the most innovative than anyone else around of us. How to, talking about the streaming, which Diana has mentioned, streaming services, we are operating HBO Max, we have the biggest streaming in Poland, also player. And one of the challenge, how to quickly understand consumer behaving and everything what we do from the direct contact in order to be better, in order to respond better. And at the same time, which I think also is very important from the media perspective, it's to deliver and constantly keep trust and the relation with the viewers. Because especially being a media, when we have a news, when we have the same important news as entertainment, the trust is very important. And I think there are many examples. I think that, again, thinking about where we are today and at this conference, thinking about the new ventures which you develop, the new ideas, I think, and coming back to what you said about this interest with the digital media and traditional media, One thing, traditional is not only traditional anymore because it has changed. The second thing is the trust is very important, and that's why we see that, we experience even from our own product when we develop the digital products, when we put them in the media which has a big reach, we see how it changes. And at the end, and the third point, the technology, the challenges, everything, as I said, the trust is very important, and for us in the both ways. With the direct contact, with the direct clients, consumers, and with our client, so the companies like you, who has advertising or put advertisements with us. So that's the challenge. At the same time, probably the biggest opportunity.
It's exactly, and I think that's the next point that I'm going to bring as well. And I agree. I think the lines between what we call above and below the line advertising are blurry or getting blurred. Stefan, RTL Ad Alliance started with a mission basically to build this powerhouse against the likes of Google and Amazon and Facebook. And tell us a bit about that, I guess, and what opportunities or challenges you've seen in the market that led to that RTL Ad Alliance.
Yes, thanks. I can just only agree on what you said, and you said it also in the beginning. So against them, not against them. Of course, we have a legacy, and we are a company which is very local and cluttered and specialists on their market, but at the same time global. So there, for me, speaking about challenges, it's the market trends. We have to adapt that, and we want to be with the audience in all that market. So we're following or we're defining market trends. So the first challenge whenever it's market trends is for me that the consolidation of the players at the moment, so or consolidation of everybody at the moment. So that we said it, we expect them, or you showed it also, they are taking already like, what is it, 50% of the global advertising budgets of everybody.
Globally,
inhaled,
and then in different markets it's even more, yeah.
So that's huge, and that's, I don't want to call it an issue, but this is something we need to address it or be ready for that. And we were very bold and very early on with that. So RTL Ad Alliance was already a response to that maybe 20 years ago. So this is the one thing. And the other thing is challenge in the matter of audience or consumption. We will talk about content later, but I think the hunger for content has never been bigger. The need, and I said it to you before, big screen is, I mean, on the race. And at the same time, audiences are just fluently like going from one content to the other, one platform to the other. Nobody really understands and know how to put in measurements, put in the performance, and respond to that. And this is the challenge, and you can create 1,000 digital products. If you don't understand that, you will have that challenge forever on.
But thanks, Stefan. As Dorota said, I think these challenges also present a lot of opportunities. And I think all of you here have worked with different corporate venture models. I will start with Dorota because I'm quite familiar with TV and Ventures. Actually, you can tell us at what stage TV and Venture is, if you're still looking for investments. But also, I think what has happened in the last 8-7 years, Discovery, the initial Discovery acquisition and then the merger with Warner Media Brothers, that in of itself, as part of a consolidation, as Stefan, you said, it's a response to the market challenges. How does the group work right now with startups? What are the kind of models or opportunities you see, or what is happening now, or what could come in the future, including, for example, TV and Ventures, which is a form of corporate venture development?
Well, it's a very interesting question, and it's kind of the robust answer probably, so I will try to give you a quick snapshot. On the one hand, of course, we are the biggest investments, the second biggest investments in Poland, American investments, and we we cooperate with the startups in an extended way. I think that the first layer, the first level, is of course the fact that we trying to collaborate and cooperate, I would say, with the all startups ecosystem in order to respond better to the challenges, but also to grab the opportunity in terms of the creating products. And the possibilities and the scope is enormous, because if you talk about the datafication, which is today It's a big opportunity to use in the journalism, data-based data facts, or with the fake news and everything what you see as a challenge of today. It's a big thing. We use the startups and the different solutions which we are getting together with the all different production, talking from the Cube to XR studios through the all different AI possibilities. We merge the data and marketing to better response. So in the way how we use the startups ecosystem, including artificial intelligence companies, that's something what is almost on a daily basis. At the same time, I think if we come back to the media equity subject, I think in this part of the Europe, probably it wasn't developed so much as in the rest of the Europe. We have a few experience and we have a few cases which we have done before pandemic time, and it was very interesting and I think very promising. From my perspective today, where we are today, and talking about Poland or this part of Europe, when the majority of the inventory is sold out, especially with our company, we have a very big interest. So sometimes it's not a natural, quick way of seeking for this solution because there is no inventory. But at the same time, if you think about what digital space is bringing us inventories, which we possess as well, or if we think about what media, which has a trust brand, can create with the owner which we have, or common solution, I think that this is the new opportunity which we have together with finding a right model, or the model where we, knowing who we want to target, where we want to get, we can create together. So the pure media equity cases we have done in the past, I would say they have been promising, so there is no bad experience. I would say it's a good experience, very good. But at the same time, for me, it's more interesting to find the good models and with the right understanding what will be the target and what we want to achieve from the both sides. Because there is one more point to encourage you all in the room. I think for the media companies, being or cooperating with the startups ecosystem, there is also a way to be upfront in terms of the innovation, which is very important. So I think that there are possibilities to find the mutual benefits, which at the end, it works for everyone the best.
Absolutely. And if I were to summarize in one sentence, it sounds like we had this previous slide showcasing all the different forms of engagement. Essentially, you're also essentially investing directly in the startups. You're also looking at partnering with them, commercial pilot programs, M&A as well, and potentially future media for equity investments, depending on a few other aspects which we'll discuss, but all of the above.
That's a good summary.
Yeah, great. Neville, we talked about this many times, and I would love for you to tell that story again, because I think that's a perfect example of how Media for Equity started for the Times Group, and why the Times Group, probably what most people here don't know, is that the Times Group, it is one of the largest, if not the largest investor of media capital. $4 billion worth of media capital invested in over 1,000 companies in the last 25 years. But it started, again, with a need, and a need to grow the print business and attract new customers to that print business. How this Media for Equity basically model started?
Yeah, so I alluded to that a little bit earlier. Basically, as we saw the digital landscape changing in front of us, as a 180-year-old company, 180 plus years of old company, we have, like I said, media assets in radio, and we invested massively in digital. Even today, our digital grows pretty aggressively. And just to give you an idea, recently there was an independent poll done about fake news. Who do you trust? Even though we have very aggressive digital assets, most people came back and said we trust the print, Times of India print, to be the most trustworthy source from where we get our information. And that's all because of what's happening about fake news, because of the way digital media is being used by people who decimate, spread the information. So we started it with an idea to say, we found these new age companies which are very exciting. Unfortunately, some of these new age companies did not have the muscle to really go out and acquire customers aggressively. any new startup, and when I speak to any of the CEOs of a startup or an early stage company, one of the challenges is that, I have a good product, I have got a good engineering team, I have a team, but I just don't have enough resources to really go after my customers, and getting them to know about my product. And what is it that we as a media company could do to address that problem? So fundamentally, we positioned ourselves as the entrepreneur's friend, that, okay, if in the three pillars of your success, marketing has to be one pillar. If marketing is one pillar, then we can come in now, for possibly a future gain through our media assets. And somewhere down the line, that was a sweet spot which really stuck. From a media company perspective, what it did is it allowed us to expand categories. If you've been in the media business, obviously there's advertisers in different categories. Now, what we found over time is that it really churned and steered up a particular category. So if we were to go to a young, dynamic startup, let's say in the real estate category, which at that point in time, and that's an example I'm giving, at that point in time really didn't advertise with us, we went and signed up with a real estate company, and by virtue of the media for equity deal, we suddenly found that all their competitors started advertising with us. So suddenly a sort of a dormant category suddenly started contributing advertising to the group. So there were two things that, as far as the group was concerned, for the group, it's like we played the role well for the entrepreneur. We were the good Samaritans for the entrepreneur, helped it sort of grow, building brand awareness of their company, possibly even building brand valuation over time. And from a media company, we created a new category which generated advertising. That's a great example. It works both ways. So how you manage that equation is the key. And that's really fundamentally the media for equity model.
Yeah, and we'll discuss in a bit, I think, the benefits, but as well where the opportunity really lies. And I would love to get your perspective on the US market. And I think Dorota made us a very interesting point earlier as well about how much the media landscape is different in Poland and potentially Eastern Europe, and why maybe this model hasn't picked up here as fast as in Western countries. And I think the unfair advantage that RTL Ad Alliance may have over here in terms of potentially scaling this model across Europe. So we'll talk about that as well. But just to conclude on models of working with startups, Stefan, maybe this question is more from the RTL group perspective, because again, maybe what people perhaps don't know is that RTL is owned by the Bertelsmann Group. It is the largest European broadcaster as far as I know, but you can correct me on that.
I hope so still.
Great. But also RTL, as you said, you have so many different affiliate partners, but you have RTL in Germany, RTL in other markets, and RTL Germany just 2 months ago announced launching a cash and a media fund. Yeah. After, I think, a few years in the making. So tell us a bit about what is happening on RTL and how you're thinking about working with startups.
Okay, yeah, for sure, I can tell you. I mean, let me get it back a little bit why this company, RTL Ad Alliance, is here and why we are working like this. So for us, it's always about trends. I spoke already about trends, but I give you a quick glimpse of how I see it. So there are some clear trends popping up in my mind every day. So this is the first of all is SWOT players, streaming services, so subscription-based, if you don't know, are shifting towards AVOD. That means advertise-based. The legacy print publishers tapping their feet into video very much. Small, middle-sized enterprises are doing the first steps in mass media when using addressable TV, for example, to reach certain targeted audiences. And even retail, and that's especially for the US maybe, changing whole industries into media or video. That means for RTL Group, it's so important to understand that this is a huge challenge and a huge opportunity at the same time. And it's from market to market different. So what does RTL Ad Alliance, and this is not the answer hopefully, is that they try to understand that. they give a simplified access to this qualitative, curated legacy content media per se. And this is out of like one-stop shop, meaning there is a centralized, simple approach for the advertiser. And on the other hand, it creates great value for the partner. So talking about the giants again, whenever the giants have a unified approach and offer, the legacy broadcasters, and speaking for all of us, I guess it's very cluttered. And so we need to be on the roof of something to create this collaboration and centralize it. For example, RTL has done even geo combinations between US and Europe to work together with NBCU in the US and RTL on the other side, like in Europe. And on new players, together with an existing sales force, I saw somebody from LG and Samsung. They are tapping into the market together with the sales force we are having on RTL. So it's a lot of collaboration, combinations going on too.
So if I was a startup, just to basically summarize and make it very simple, if I was a founder from the US market, essentially looking to tap into the European market, but also vice versa, if I wanted to scale my brand and if I needed that advertising expertise, but also to work with media partners, essentially what RTL Ad Alliance provides is that access to all the different publishers and also kind of hand-holding the company when going into a new market.
Yeah, thanks. Forget about that to say it's a very high consultative approach. So whenever we take the hand of somebody, it's really that we try to create the trust, as you said, and to give them the easy way how to do it.
Yeah.
So,
Diana, I just want to add something. Sorry.
sure, of course, please.
So from an entrepreneur or the founder perspectives, a lot of the presentations here were a lot of B2B and not necessarily B2C. And there is according to me, there is a fallacy that advertising is only required for B2C companies, which is not true. Even B2B companies, if they were to sort of reach out to organizations like RTL Alliance, they would be able to give you a much deeper understanding of a particular category in which you're operating and qualifies for reaching out to your customers in that particular category. So, I think marketing of even B2B products is a very niche subject and must be looked at over time. That's what I felt.
Just a quick comment as well. So sorry for not giving you
course.
time for the questions, but exactly, I think I wanted to also comment on that. I fully agree, and that's why when we talk about very often, from the media perspective, we ask our clients or the partners what we want to achieve, who we want to talk, who is the target. Then we probably can able to choose and to build the portfolio of the communication, the strategy of the communication to reach all those direct consumers or the B2B sector, because especially as we sit here as a big companies, in Poland, our group reach 34 million per month of the viewers, 8 by the digital assets, 8 million. So the variety is there, the tools and the possibilities. I think that it's important to start to talk to see what are the goals, the targets, and how we can get there. And possibly, from my perspective, it's the new time. It's bringing the opportunity to use some of the solutions or some of the startup ideas in the company, because then also this collaboration can bring and accelerate the usage on the international basis, because we are all international companies who are based across the world. So I think there is a possible a new era of the cooperation, because the partnership those days probably one of the key element of the growth anyway.
Absolutely. And I see that we are approaching the end of the panel. I don't know how this happened so quickly, but I want to discuss about the opportunities and what's next, because a lot of people also are listening in and are watching this discussion online. And a lot of companies, I think, investment and fundraising, and we'll see the finalists in a second, obviously pitching for potentially financial support. It's a big topic for a lot of founders. Media for equity or media capital has been around for quite a while, quite developed in Europe. But as we already established, some regions, some parts of the world are just getting started. So in the next few minutes, I want to discuss about where you actually see the opportunity, what's next. And Neville, we can maybe start with you, because I think you have an opinion on what's happening on the US market right now.
So very quickly, since we're running short of time, yes, in the US market, we are working on a project which is really going to address this particular media for equity model. It's not yet as popular, done fragmentally. It's been done in fragments in different media houses, but we plan to sort of work on this project. And I think probably Europe has more media for equity kind of opportunities right now as I see it.
Yeah.
In the US, we are working on it, and that's the pivot that we are looking at right now.
And staying with the same idea, it is developed, but as we already established, more in Western markets. Dorota, why do you think hasn't really picked up that much in Poland or other parts of Europe, and what do you think has to change for that to happen?
Well, I think that, of course, there are differences between Poland and the rest of the Europe, but I think at the end, what is also important is the fact that Poland is an enormous potential because of the size, because of the opportunity and the growth which exists here, very often quite stable versus other parts. So there is a good opportunity, and this is a very, very good positive note. I think that because of the inventory or the usage, I think that creates a need to talk about the business models. And I think that while we talk and identify what we want to achieve together, there are potential different ways to get there. So generally, I'm very positive. I think that it's a new time, it's a new era, and especially that the old traditional media, as I said at the beginning, they're not traditional anymore only. They're also sits or stays quite strong on the second leg, which is a digital. Therefore, I invite you all for the cooperation.
Great. Stefan, do you want to add something?
Quickly, yeah. So, in my opinion, you all know your home media. They are all really local champions. They know their home market. They have adapted products for their market. They understand the advertiser coming from the market, what a need for this audience. But that means they have products towards these markets. Could be media for equity in some of the markets. For RTL, it's, for example, in Germany, as you said, in the UK, in Spain, they have funds for local players in the home market. In international, it's a different story, or tapping into foreign markets, as you guys also did. It's not so easy, it's not so much there. You also have to speak with your partners, and that's why we are thinking more globally. We're trying to implement fundraisers, even external, but the experts then on our side. So that could allow somebody to go multinational with the help of our experts, but the money from an external fund.
If I were to rephrase what you said, you're basically saying there is an opportunity for a pan-European potential media capital fund where you have a company, for example, sitting in Poland and looking to enter perhaps UK or the German market or other markets all at once, and using the RTL Ad Alliance partners and RTL inventory.
I mean, you see, I don't have hair anymore, so this is why I'm working on that a long time already.
Okay. There were so many other things that we wanted to talk about, but I think we are running out of time. Maybe just to conclude and invite everyone that has listened, if you would like to follow up on this topic. Clearly, there's two sides of the discussions here. If you are a company, if you're a startup that are thinking of fundraising, and as Neville said, it's not really just about consumer startups. If you are a SaaS business or more of a B2B2C company, I think this is still a model that you should think about. But equally, if you are a media company that would like to understand more about how the mechanics work or how the fund model works, it won't answer all your questions, but hopefully at least it will provide a bit of context into what we discussed today in a bit more depth. There is an entire report which we released actually last October at Wolf Summit in Vienna, which is still very much up to date. So I encourage all of you to maybe download it. You can also reach out to me, but also to our guest if you have any questions and if you'd like to connect with us. And on that note, I think it's time to listen to the finalist and also find out in probably an hour who's the winner of this year's Great Pitch Contest.
Thanks so much for listening. I hope you enjoy the show. You can find the full video episode on YouTube on the Media for Growth channel, or you can listen to it on Spotify, Google, or Apple Podcast. And let us know what you think by leaving a review. The full script and more investment insights are available via our Media for Growth monthly newsletter. See you next time.